This rally on the dollar is very unusual. 7% increase on the DXY index, which is measured by looking at the dollar, US dollar versus at a big appreciation of the gold of the dollar. Last 40 days, 7% increase, 70% of those days were positive. That only happened when Trump was elected in 2016, of which the dollar also strengthened significantly for the next weeks. And then we peaked. And a big decline of the dollar happened once all the way to the beginning of 2018. 2018, we had a big, very challenging year for equity markets. And then the dollar actually rallied again. And then the dollar rolled over once at the end of his term. And I think that this is kind of similar to where we are now. We've seen this big increase in the dollar.
The US dollar index, DXY, has surged 7% over the past 40 days, with 70% of those days showing gains. This kind of rally is rare and was last seen after Trump's 2016 election, followed by a peak and subsequent decline into early 2018. The dollar's pattern then correlated with a challenging year for equities. The current rally resembles that period, suggesting a possible turning point ahead. Tavi Costa, a portfolio manager and partner at Crescat Capital, known for his insights in macroanalysis, explains the recent US dollar rally, driven by rising 10-year yields, is seen as unsustainable. Historically, rallies similar to those after Trump's 2016 election led to eventual dollar declines. Expectations of higher inflation due to policy changes may be overblown, as Trump previously favored a weaker dollar. Referencing modern monetary theory, it suggested that aggressive fiscal policies could quickly trigger inflation. The speaker anticipates a weaker dollar as a deliberate policy move to stimulate growth, potentially leading to a shift where emerging markets outperform U.S. equities, signaling a significant macroeconomic shift. The expected outflows from the U.S. dollar could benefit emerging markets. In a recent interview at Liberty and Finance, Tavi Costa highlighted that this aligns with a long-term secular shift favoring gold, miners, and oil companies, sectors that have been undercapitalized. Capital will likely flow back into these areas, boosting their growth and performance. Join us for an in-depth analysis of the video and be sure to subscribe and hit the bell icon to stay up to date with our latest content.
Absolutely. I think it was undeservedly negative for gold, although I can see why gold would sell off. If you think about the reasons, is potentially just because he's likely to be a pick that will change quite drastically the probability of government that has been so reckless for so many years. If there's ever somebody that could potentially change that, that could be him. So you've had 10-year yields actually decline on that day, and gold sold off significantly. And that's just I think, misunderstanding the bigger picture of his pick. I think Bessent is a very capable leader, number one. I think he's probably one of the best Treasury Secretary picks we've seen in many decades. And I think this brings a lot of changes to the precious metals industry, given the fact of his own views mentioned in some of the interviews that he's done 3 weeks ago, for instance, with capital allocators, where he mentions in a question to him where he has said that basically gold was his largest position and that we're approaching potentially a realignment of the global monetary system, very similar to a Bretton Woods kind of moment. And I do think we're about to see something along those lines, and that he wants to participate on that from the inside and the outside. And so all these things are extremely important. None of us really know exactly how this will play out, but this is a significant change to the global economy, given the fact that we're seeing central banks accumulating gold in a large pace, and also the fact that we know that they meaning monetary authorities, are in need to really replenish and also enhance their balance sheet by backing their currencies again with a metal like gold. And so these are real important changes in the dynamic of how the U.S. may play a role here in terms of the reserve currency status. I think, as Bessent has said many times, we can grow our way out of this, and this is probably your last chance to do that. But that comes at a cost. That comes at a cost of the dollar. And the dollar needs to be devalued, in my view, in a large way, as we see the cut of fiscal spending, along with potentially looser monetary policy in order to accommodate the debt And all that is going to have an impact on the dollar itself. So this only strengthens my view about the US dollar.
Moreover, a leadership shift in global markets may be underway, with the US dollar and equities facing potential decline after years of outperformance. The strong dollar has inflated US equities, seen as overvalued. Historically, from the 1960s to the 1990s, global markets outperformed the US, a scenario that seems unlikely today but could repeat. The transition could be painful as capital flows from US markets to international ones, signaling a significant and potentially disruptive market shift. Tavi Costa points out that gold's rise could significantly boost silver in a potential stagflationary environment. Silver's role in solar energy, highlighted by Elon Musk, and its lag behind gold, 30% below 2011 levels, make it undervalued. Silver could see significant gains through industrial demand or economic shifts, potentially making this the decade of silver. Now, let's dive into the interview.
It's the most exciting metal out there because I just don't know how, like, if we see a stagflationary environment where gold really trades a lot higher, just gold moving higher should be extremely positive for silver. Then we have this move towards solar panels that even Musk has tweeted about being one of the main sources of energy, or that we may see in the future. And how will silver play into that if that's the case? And then you have the monetary aspect of gold leading the way. Gold is already 40% above its 2011 levels. I tweeted this a few weeks back. But silver remains 30% below its 2011 levels. And so you got this kind of crazy gap between these two metals that are completely unsustainable. So, none of us, in my opinion, own enough silver. And I think this is extremely bullish for that. So, let's just say, what if we're going to grow our way out of this and not see a stagflation environment like we're talking about here, and end up seeing major industrial changes and all sorts of things that actually help silver in a huge way? This could be the decade of silver even. Who knows? I mean, I don't know. Like, I'm just talking about probabilities, and I'm just trying to express my views about how bullish I am in the metal, but it's hard to pinpoint how big the opportunity is, but I do think there's major opportunities here for the metal to do very well. This is going to be the challenge: is it really stagflationary, or is that's the part I haven't figured out. I think I fall more in that category too, but certainly growth could play a role here too. Like, you could see an environment. Well, let's say it's the 70s was a very stagflationary era, right? But if you look at nominal growth at GDP, was positive throughout the whole era. And then I know what people say. They're all going to say, well, but that's because of inflation. Yes, that was inflation. Real growth was a little bit different. In fact, the equity market didn't go anywhere throughout the whole decade. I don't know if that's a redux of that. Like, that's the part that I'm thinking a lot about. I think the equity market may reflect that because the valuations are so high that I'm not sure we can see a lot higher unless we're going to hyperinflate out of this, which is another possibility. I mean, if policymakers fail, we can hyperinflate our way out of this. And that's a scary world for where gold could trade in that environment. So the point being is that those questions might be too technical to answer right now. And maybe we don't have to go that far. But not that we do know this, but what, you're trying to get to a level of confidence to deploy capital. And in this case, it's hard to believe that this set of potential outcomes we have on the table will not benefit precious metals and will not benefit miners in response to that. So there's a lot of things that are mispriced in a world where these assets become critical again. And so this is very interesting, actually. I think this is one of the most exciting times of my career, at least.
The recent shifts in the US dollar, equity markets, and precious metals suggest a transformative period in the global financial landscape. As the dollar's strength appears unsustainable, capital may flow toward emerging markets, such as gold and silver, driven by economic and industrial factors. This shift presents risks and opportunities, with silver particularly positioned for potential outperformance due to its undervaluation and rising industrial demand. How might emerging markets capitalize on a weakening US dollar in the coming years? Could silver's dual role as a monetary and industrial asset make it more resilient in a volatile economic environment? Let us know your thoughts in the comments below. If you enjoyed the video, give it a thumbs up and subscribe for more updates. Thanks for being part of the journey.